This week, Bitcoin prices plummeted more than 3%. Crypto bank Silvergate questioned how it would make it through the next year, and Illinois weighed a new crypto regulatory regime. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currency prices took a hit in the past week, with Bitcoin falling 3.5%, Ether dipping 1.5%, and Solana sliding 7%. Markets looked pretty steady earlier in the week, but questions around Silvergate's ability to survive the next 12 months hit prices hard, especially today. The crypto bank delayed financial documents, and while telling the SEC about that delay, it said that all the money it lost in 2022, around $1 billion, meant the company was reevaluating given the regulatory and business challenges it faced. That left customers reevaluating their partnerships with Silvergate. Customers like Coinbase and Paxos fled the bank, and investors fled Silvergate's stock, which dropped nearly 60% on Thursday. Worries about another round of contagion hurt crypto prices this week, and they underperformed the S&P 500, which was actually up 0.8% for the week as of noon Eastern. Another big story this week continues to be regulation. Now, crypto prices seem to have withstood the recent spate of SEC crackdowns, but crypto companies are closely watching the changing regulatory landscape across the U.S. In Illinois, lawmakers there just introduced two bills that would bolster consumer protections and introduce a licensing regime not unlike the one in New York. To talk a little bit more about how states are pushing U.S. crypto regulation forward, I spoke to David DeCarlo. He's the Regulatory Innovation Officer at Illinois' Department of Financial and Professional Regulation. That department helped draft the bills moving through the state's General Assembly, and he explains why state collaboration could benefit crypto and consumers alike. All right, David DeCarlo, thank you for being here this week. I kind of want to start with sort of an overview of what crypto is like in Illinois right now as you're moving these pair of bills through the General Assembly. Can you walk me through what crypto looks like in Illinois, what the industry looks like, and the state of the crypto regulatory regime in Illinois as it stands right now?
So I'm sure, as you know, Jordan, and by the way, thanks for having me on this today. In terms of what's going on in Illinois, I'm sure you know that Chicago has always been a focal point for financial innovation. And so in Illinois, that's one of our strengths. So we do see a very active crypto and digital asset industry. There's a number of stakeholders that when I came into the role as our state's first regulatory innovation officer at the end of 2021, we've had listening conversations to understand what things look like on the ground. And these two bills are the culmination of a lot of effort over the last year within our agency and reaching out to stakeholders and other regulators to try to put forth something that's going to promote responsible innovation in our state.
So let's back up for just a second and talk about what your role is in this regulatory officer job. Can you walk me through what some of your responsibilities are, how you work with some of the industries in Illinois? How do you operate?
Yeah, so we're not the first state to have an Office of Innovation at their financial regulator. Not the first regulator overall. There's federal regulators as well who have these offices, and my role is similar to some of those. It's twofold. One, we have an open door in terms of if there's innovators and consumer advocates as well who would like to talk to us. I'm the central point of contact at our agency for trying to understand some of these innovations and the technologies and how they interface with existing regulations. And then the second part is really key, and we can talk about this some more, is the existing setup of financial regulation it tends to be kind of siloed. You've got banking regulation, non-bank regulations that apply to consumer financial services. And so part of my role has been to, within the agency and working with other state agencies as well, to coordinate and have a wider kind of outlook on what fintech and digital asset improvements for consumers look like, and then also having the appropriate safeguards in place. So breaking down silos within our agency has been an important part of my job.
So let's talk about those bills then. You helped craft these bills in both chambers of the Illinois State Assembly, and you're establishing a licensing regime and some consumer protections. Can you walk us through why you thought these protections were so important right now, and how you're addressing some of that siloing that you just mentioned that might be prevalent with crypto and financial services?
As you mentioned, there's two bills, and one of them is a consumer financial protection bill. The other is our fintech digital asset bill. I'll talk about the consumer protection bill first, because what that bill is going to do is really level the playing field in terms of any type of financial services provider, making sure that there's basic consumer protections in place. And we've taken a cue from what's working at the federal and state level in other states. That's giving an agency the ability to look at what are some unfair, deceptive, abusive practices, monitoring markets in real time, and being able to react in real time when those complaints from consumers come in. So that's really important, and actually underscoring the importance of states being the first line of defense for consumer protection is the Supreme Court actually just took a case this week on, again, folks are trying to challenge the constitutionality of the federal Consumer Financial Protection Bureau. So we think it's really important that states, especially a state like Illinois, be able to take the lead there in protecting our own residents. Then the second bill, the FinTech Digital Asset Bill, is more focused on licensing for digital assets. And we are talking with New York, and there's legislation in California to try to put forth a regime that would complement what is happening in other states. We're not trying to reinvent the wheel. We want to be able to work with other regulators and then raise the bar nationally by having in Illinois a digital asset licensing program that would put in protections for consumers in our state that are already working in a place like New York.
Yeah, I think I want to talk about that collaboration between states first and foremost, because I think when people take a cursory look at what's happening with crypto regulation in individual states, they maybe say that it is as siloed as some of the concerns you brought up earlier, or maybe it's in piecemeal. How much collaboration is happening with states, with Illinois and with New York and California or others? How much collaboration is happening there, and how easy has it been to reach a consensus on some of the rules that need to change?
So I can tell you there's, we have a direct line to each other in some of these states where we're sharing information on what is going on in these industries, fintech broadly, and then digital assets in particular, given everything that's occurred in that industry over the past year. And then talking about what are some of the things that we could try to move the ball forward together so that, again, we want responsible innovation where there's rules of the road for the companies that are trying to do right by their customers. And then customers know that there's some basic common sense safeguards that are already working in New York with their licensing program for virtual currencies. And then even going back further, are already working in traditional financial services, right? So these are the types of things like investment disclosure, so people understand what they're getting into when they buy it. And then another one is safeguards for customer assets, so that there's some confidence that when customers have their crypto with a company, that's their crypto and it's not going to be in a bankruptcy, end up in the company's sort of liabilities that other creditors would get a chance to have as well.
Can you talk a little bit more in specifics in terms of what you took from New York's BIT license regulatory regime? I know that it's a high profile level of regulation in New York. I think a lot of companies look at it and they're either in favor of it or they have some questions and concerns about it. I mean, we've seen lawsuits as recent as this week or last week where New York was cracking down on some companies that were operating without a license in the state. How much inspiration did you pull from New York, and what do you think is working there that might work in Illinois?
Yeah, we did take inspiration from New York. We took inspiration from our conversations where there is legislation pending in California as well. So with some of the folks that are working on that there. But again, it's kind of a complementary framework. And I think what is working, we just talked a little bit about those basic consumer protections, the investment disclosures, customer asset safeguards, even customer service standards, having somebody who's available to pick up a phone at a company and help someone out when they're having a problem. But then getting to kind of the risk management is really important. And I think that's what's working well too. these companies need to have the basic financial resources. That's the capital liquidity requirements that that financial regulators talk about to be able to operate effectively. So if there are downturns in crypto asset markets or more broadly in the economy, that those firms are able to weather those scenarios. And then other risk management around cybersecurity, money laundering, fraud perpetrated against the company or against its consumers. So we're taking that type of framework as well, where those types of plans and procedures would be expected of companies in order to operate in our state. And I do want to mention one other thing, which is we've put into the bill, the FinTech Digital Asset Bill, an on-ramp, so to speak, for companies that do have the virtual currency license in New York. So they'd be able to apply for a conditional license in Illinois while their full license application is pending. And we think that's good for a transition period because we're going from a framework in Illinois where there's not digital asset or virtual currency license, and giving some of those companies that are already in New York playing by those rules an opportunity to ease into the requirements that we'll have in Illinois.
Yeah, I do think that goes to the point you make about being complementary to some of the other states. If they are properly registered in New York, being able to sort of easily transition that regulation or that license over to Illinois might prove beneficial for these companies. I am curious, how much support have you seen among crypto companies that operate in Illinois? Have you worked with them on these bills? Have you heard any sort of support or pushback? What is the industry saying to you?
We have gotten some support in response to, we had a press announcement on this, some social media, and have seen some support. We do expect there will be folks that will comment on some of the technical aspects of the legislation as it's moving through our General Assembly. And that's part of the process. So those conversations will continue to take place with industry and consumer stakeholders to make sure that we have something that's that could really be implemented effectively on day one, once it, of the effective date of the legislation.
What about support from Illinois lawmakers? Do they clearly understand the industry that they're trying to regulate or vote on with these bills? And how supportive have they been in moving this legislation forward?
Yeah, so our sponsors on these bills in the House and the Senate are very knowledgeable about the financial industry. They're the immediate past chairs of the Financial Institutions Committee in each chamber. And they've made it a priority working with us, and we've had conversations with them, going back to last year, to share with them industry development. So they're very well educated on what some of the challenges are and what some of the opportunities are, so that we can better protect Illinois residents. And again, take the best of what's working in other states with both of these bills and package them together in a way that the legislators and the administration and all these stakeholders understand would really put Illinois at the forefront of consumer protection nationally.
Yeah. And speaking of that national recognition, I want to talk about the federal level for a little bit. I mean, there's been a lot of criticism launched at federal regulators, if it's the SEC or the CFTC or even Congress, for a lack of regulatory guidance for crypto. And states are sort of taking a lead here when it comes to setting up regulatory bodies to handle the space. But do you feel a greater sense of urgency because of the conversations happening around FTX, or playing catch up with some of the lack of regulation at the national level? How urgent do you feel to get these rules passed?
We feel it's very urgent. We had been working prior to last summer, when some of these challenges and more than challenges, scams, collapses in the crypto industry were starting to occur. Those events accelerated what we were trying to do, and really made it a goal for us to put forth both of these bills during this session, so that we could get in place as soon as possible some of the basic protections. And since the licensing program does take time to set up, the way that we're managing that is the Consumer Financial Protection Bill is really important, so that on the effective date, we'll be able to, especially for retail customers, take a look at some of the the bad actors, not just in crypto, but in other industries as well. So that's why these bills really work hand in hand, is because we've got the licensing creates, was kind of the long run goal. But since those programs do take time, even with the transition period, the Consumer Financial Protection Bill is really critical in order to have some protections right away for customers.
Yeah, and I should point out that that's not to say that the SEC doesn't have any rules when it comes to crypto. I mean, they talk to Gary Gensler, he'll say that the rules are pretty clear when it comes to registered securities and unregistered securities and so forth. But in Illinois' case, or states broadly, is there collaboration or cooperation happening with federal regulators to sort of move both state and federal rules forward? Or is this something that you're doing on your own, regardless of what's happening with federal regulators?
What we're trying to do is take what the federal policymakers and lawmakers are acknowledging, is that there's some current gaps in regulation. SEC, CFTC do have some important authorities over crypto and digital assets more broadly, but there's still areas where their authorities don't go far enough to protect consumers. And so that's why it's important for states like Illinois, especially where there's, as we talked about, there's an industry here, to try to put those protections in place as soon as possible, because we've all seen, these headlines really every week now where there's some scam, some collapse. In Illinois, there was one recently, as many as 7,000 residents, unfortunately, were taken in by what the federal authorities are saying is a crypto Ponzi scheme. Now, the federal authorities are responding, but it's after the fact. It's to the fraud that has occurred. We think we need these protections in place at the state level because we try to get in front of fraud by making sure it's very clear who's licensed and who's just pretending to operate as a legitimate company.
I also want to take the other side of it from the industry perspective. Are you concerned at all about a flight of talent out of Illinois when it comes to rulemaking? There's been some talk on Crypto World in recent days and weeks about, crypto workers may look abroad for jobs or for opportunities if they feel that the rules are too restrictive here. And as the regulatory innovation officer in the state, is that a concern for you, or are you working on ways to attract talent while also controlling the industry for consumer protection and for some of these licensing rules?
I think what we've seen and what we've been hearing is that there are companies that really would like to have some more sense of what the basic standards are. There's some industry groups that, I want to acknowledge they're trying to approach it from a self-regulatory standpoint, but that is really just kind of a complement to having some basic regulation. And in New York, it has a thriving cryptocurrency, digital asset industry. Similarly, in Chicago, we have that as well. And so I don't think we need to be part of any sort of race to the bottom here. It's, in states like Illinois, New York, others, and really we should all across the United States hold ourselves up as we can have both. We can have thriving industry and we can have common sense consumer protections in place. And I think that's our approach here, is we're taking what is very normal to see in traditional markets, tailoring it in a way that will make sense for crypto and digital assets.
Final question for me, and this is more about financial services broadly. There was a lot of concern about crypto contagion after FTX and some of the subsequent bankruptcies we've seen in the space. And most recently, there's been some question around Silvergate, that crypto bank, and how stable it is over the next 12 months, given all the money it's lost in the wake of FTX and the crypto fallout last year. How are you thinking about banks getting involved with crypto within the state, or the custody of assets of crypto? And is that something you're thinking about in terms of possible rulemaking now or in the future to protect a sort of contagion event with some of the banks in Illinois?
We did something similar to what the federal regulators announced last year. So our division of banking, and I worked with the division of banking on this. We put out very similar guidance to the federal government around if a bank is going to be engaged in crypto assets, you need to look at the legal permissibility of that particular activity. You need to be talking to your regulator about what are the risks and the appropriate risk management amount around that activity. So that type of guidance it's actually very tech neutral, because all the regulator is saying is very similar to all banking regulation is come talk to us when you're engaged in a new business activity so that we could take a close look, bring a plan, around how you're going to manage these risks, and then it's something that can be discussed. And that's the starting point, is to have those types of conversations. There was the more recent guidance from the federal government around some of the liquidity risks. And I think, as you mentioned, there's some very clear examples of some banks that, or at least one, that has had some challenges because of how exposed its business was to crypto.
All right. Well, thank you so much for taking the time today and explaining how the state is working to regulate crypto more and also work with the industry to get registered and get licensed.
Thanks, Jordan. I really appreciate it.
All right. That's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.